we're watching the kind of activity in the markets right now. It seems like a slow start to the month of October on the Last Street. Nifty ending the day in the red today. Top losers include Inditrade Bank and ONGC, and the broader indices have managed to outperform the benchmarks today. But historically, October has been this good month for the markets. The Nifty has advanced 8 out of 10 times in the past decade if you look at the kind of activity that we've seen in the markets in the month of October. And most of the sectors, they've ended in the green. So now the question is, how should investors approach the month of October? What sectors should you really bet on? Let's find out. Our guests are still with us, and I'll take it back to them. But Ashesha is joining us to put things into perspective about the month of October and the kind of moves that the markets make, particularly in this month. So generally, it's a good month, but there are several moving pieces, not least of which would be the new norms that SEBI has brought in for F&O activity, Ashesha. But tell us more about the month of October and how the markets have behaved.
October, in fact, is the month which has shown strongest seasonality over the last 10 years. First up, let's talk about individual sectors and how they've performed. Nifty has given an average return of about 1.7% over the last 10 years. We have Nifty Mid Cap Index, average return of 2.1%, and Nifty Bank Index. In fact, this has bucked the trend with an average return of about 3.9% over the last 10 years. Nifty ended in the green in 8 out of the last 10 years. Nifty Mid Cap 9 times, and Nifty Banking Index has ended in the green 9 out of the last 10 times. Let's also talk about individual sectors and how they've performed. PSU Banking Index is bucking the trend with an average return of 7.3%, followed by private banks, 3.7% average returns. We have financials, auto and real estate with average return anywhere between 2.7 to 3.5% in the month of October. Only 2 sectoral indices have ended, or rather have given an average negative return. FMCG Index, which has given a negative return of 0.5%, IT Index, which has given an average negative return of about 0.3%. Let's also talk about individual stocks, and we've picked up 5 stocks which have closed in the green at least 8 out of the last 10 times. We have Canara Bank, average return of about 13%, Delta Corp and TVS Motor, average return of 10%, ICICI Bank and NMDC have given an average return of about 8% over the last 10 years. Let's also talk about the losers then. We have picked up 3 stocks which have closed in the red in at least 7 times out of the last 10 years. Vodafone Idea, average negative return of 6%. Followed by Astral and Biocon, which have given negative return of 3%. But yes, October has proved to be the strongest month when it comes to seasonality, and index returns have also been quite decent.
Thanks for putting that in perspective for us, Ashesha. Really appreciate it. But Mr. Bandyopadhyay is with us, and he watches the markets, whether it's October or November or any time of the year. It doesn't make a difference. Mr. Bandyopadhyay, when you look at certain trends in the markets, like we are spotting for the month of October, how do you correlate that with what you currently see in the markets and the trends that we are talking about, including the moving pieces, including geopolitical risks? We are looking at crude oil prices move the way they are. There are several moving pieces, as they always are in the markets. But when you consider the trends that my colleague was highlighting for the month of October, what does it tell you?
Well, I would like to have a slightly different view as opposed to the trend, which I think your colleague very correctly pointed out. You know, trend is a trend, and what has happened historically is a fact. But let's look at where we are today. I think, as you rightly pointed out, there is a significant geopolitical uncertainty in West Asia. The oil prices are jittery, and one doesn't know which way this geopolitical tension will move and what shape it will take. So, that's a big area of caution and red flag. The second issue, which is closer to home, is what's happening in China. After lying low for a very long period of time, Chinese government has suddenly woken up and started giving significant incentives and stimulus to kickstart the economy, and that has enthused the market participants globally. And because the Chinese market was quoting at a significantly discount to other Asian peers, a lot of money has started moving into China. Now, we have to watch the interplay of these two things, which are negative for India. On the other hand, we have a couple of things which are very favorable. We had a decent monsoon, and we are stepping into a festive season. That's what pretty much happens every October. We start the festive season, which moves from October, November, December. This entire quarter remains a festive quarter when I think the buying of items and lot of expenditure does take place in India. And that kind of kickstarts a growth cycle for many Indian corporates which are in consumption-led themes. So generally this is a good time for Indian corporates. Q3 is a good time. Between these two trends and the fact that there is significant liquidity sloshing around, forget the global investors, even domestic liquidity is close to incremental 50,000 crore per month, which includes 25,000 crore of SIP and another 25,000 crore is coming from HNIs, family offices, PMS, individual investors. So it's a significant amount of incremental money which is coming to the market. And that's what we have been seeing for the last 8-9 months, which has been sustaining the markets.
At this time.
So
are you convinced about the valuations, Mr. Bandyopadhyay?
Sorry?
Are you convinced about the valuations in our markets right now, and which are the sectors that look more promising for growth in the month of October? If you're going to talk to investors and tell them that, look, these are the most promising themes. You were talking about consumption as well. Is that going to be the current flavor of the market, or do you think we need to look beyond?
We need to look slightly beyond. So I would say the best sector for me as far as valuation is concerned is BFSI. I think that's very attractively valued. And compared to other sectors, we haven't seen a real run up in the valuations. So BFSI definitely needs to be looked at. Credit demand is going up, and festive season leads to a lot of credit demand as well. So BFSI, whether it's the banks, whether it's NBFCs, whether it's gold finance companies, and whether it's housing finance companies, I think these companies will have a good time. Valuation-wise, they're attractive. That should be looked at. Of course, the usual consumption themes need to be looked at. FMCG, consumer durable. I think there was a slowdown in rural demand, but that is coming back, and we expect it to be back in full swing during this festive season. So one needs to look at that segment as well.
We have been told by SEBI, or at least not told, but not directly at any rate, that, look, don't get into riskier trades. At this point in time, is it a risk-off kind of attitude that investors should have, looking at all the kind of moving pieces that you were talking about, whether it is China, geopolitical risk, crude oil, at this point in time, closer home, you're talking about consumption, a good monsoon, all of which considered, is this the time to take risks?
Well, I believe Indian capital market will definitely reward shareholders. And if you're going to be in the market for a long time, which is, I define 1 year plus at least, there's absolutely no problem in even entering at this stage. Of course, you have to pick up the sector and the stocks correctly. There is absolutely no problem. You can expect 15% plus the return on an annualized basis at least. And that is best in the class amongst all other options you have today. So yes, SEBI is talking about unbridled speculation, which is leading to losses. But they are not asking us, or they are not hinting that market is overheated, don't invest in market.
Said Mr. Bandyopadhyay, as always, such a pleasure getting in your perspective on the markets. Thanks indeed. We look forward to getting your perspective in the future on India Tonight as well.
If you like this video, then like, share and subscribe to ET Now.